the S&P 500 daily cloud chart and a couple of rules set way back in the day in the 40s and 50s is that the cloud chart should be used on daily studies. So we follow that rule. And the cloud is really relevant only in trending markets. So what they meant back in the day was either going up or going down. But we've seen that the lagging line and some other aspects of the cloud, when they coincide with current indicators and lines, etc., work pretty good in sideways trending markets. So we'll include sideways too. And I bend all sorts of rules other than Tom DeMark's with the thought that these are extreme times and they call for extreme measures sometimes. So here's one. We'll include sideways trending markets in cloud charts for the modern era. And I've just switched on the Bollinger Bands as the lagging line 26 bars back could hit the bottom of the cloud from underneath the cloud tomorrow, and that level 26 bars back for the 27th will be 43.0529, and the Bollinger Band lower band is the closest level to that in current price, 4290.49, along with the old venerable horizontal line in the daily range chart. Here's the upper range and the lower range. We are now in the lower range after sliding right through the no man's land. So 4305.31, and that goes back to 11/20/2021, along with the top line of the broadening top pattern going back to January 2018. And you can see it was negated down here, but we still use the top of the line for that broadening top pattern, so we're right below that too. And that level's at 4308.65. So a few levels to the upside if price tries to turn around and head back up. It's got a little bit of a fight to get above those levels there. And price is right underneath the Stark band, lower band, 4283.89, and the channel 3 low, 4283.85. So there's a conglomerate of resistance there, and price nailed the 200 EMA here, and to start the day tomorrow that's at 4264.64, and I put the 200 simple moving average in green right behind the 4 here, 4194.60. And price pretty much nailed the qualified demand projection, 4261.08, a low of 4265.98. So this is a projection. Sometimes it doesn't even make it down here before it turns around, but that means nothing for support or a reason to buy. It could just go right past that as it's just a target, and I've seen that do that plenty of times and turn around and go back the other way. And in between the 200 EMA and 200 simple moving average is this, the measure from the pennant breakout in black. It's the top of this measure rule, and that goes all the way back to here in the COVID crash era, May and June. And when it got up to there and blasted through it, this was totally illegitimate in my eyes. And I was on board, but after that and up here, I waited for shorting opportunities and found that good one right here at the very top. And then I always said you just put your thumb over this, and yeah, it fell down below it. Tried again, and now it did it again. It went back above it on this last run, and it looks like we're headed down towards it again at 42.36. And that same area has this blue zone here, which is the horizontal support from 05, 10, 20, 21, and then the top of the super bullish wedge. But this is the area where the Fed made their first mistake in 2021, and then it went on that tear as we saw before. So that's an important area around that measure rule 42.36. So the horizontal support at 42.28 and the top of the super bullish wedge from 5/10/2021 at 42.37. And it has a gap zone here. The bottom of the gap zone is 42.32.43. Top of this candle here, right around the same area. And the pitchfork level 1, so the very bottom of the pitchfork. And here's the S&P 500 weekly chart, and you can see the lower Stark band right there underneath that candle, 42.36.55, so right in that same area. And here's an S&P 500 daily chart showing DeMark trend factors. So we did some buying at the second one, and those are certainly all in the red in my portfolio now, so we'll just hang on to see how much downside there is, and if there's downside that tags this trend factor down 3, then we'll buy more. I don't know about exponentially, meaning if I bought 2 here, I would buy 4 down here, and then 8 here, 16, etc. But certainly a little bit more buying here, and actually before that, when it hits those 42.30 zone area with all that support. And again, that level's at 42.28.31, trend factor down 3. And the combo and sequential buys set up 8 count printed. And to negate that for end of day tomorrow on the 27th, there must be a close above 43.30 for the price flip to the sell setup count 1. So if you don't believe it's going to be that big of a bounce, that means the sell setup 9 count will print. So if that happens, then there'll be a new TDST line probably at this close here, 45.05.10. So that will be the new ceiling. And the floor is here at this disqualified sell TDST 41.51.28. And that ARC 0.618 level 41.63.14. And the combo by countdown 11 printed. So we got 2 more. So there's rules with that. I won't go into them. I'm using the less strict version, so it will print quicker than the strict version, but a couple more days. We definitely have to have closes below the previous 2 closes, bars back, tick lower than this previous bar the previous day, and etc. There's all sorts of rules with that. But it's pretty close to printing, and it could coincide with some of those levels in the 42.30 zone. And the sequential by countdown 13 is also printed a few days back. I have it on another chart over here with the ATM trigger. where everybody's gathered in the basement here, so there's only one place to go now, and that's up. But it could stay down here for a little while longer. But the last time everything gathered in the basement, like over here, and there was a pretty good pop to the upside. So let's see what happens. It is really oversold, and if that buy setup 9 end count does not print because there was a close higher than 43.30, then I'll sit up and take notice of that for sure. Meanwhile, the Shande momentum indicators at negative 48.95. We're looking for negative 75 for complete utter exhaustion. It hardly ever hits 75. Once in a while, back in 22 it did. So, I mean, this is getting quite oversold here. And the QQE fast is fast approaching the oversold 30 line, just like RSI. It's pretty much almost exactly like RSI, except it has an extra line here, this slow QQE, so it's definitely well below that and headed towards 30. And the absolute worst case scenario would be to get a tick lower than this low over here on May 4th, 48.28. And if that happens, then this too shifts over to take the place of the 4, and this 1 takes the place of this D wave up wave 3, and then we start all over again on D wave up wave 3 over here. Worst case scenario.